Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using strategic or compound return investing. So the objective is try to get 201 trades. Each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at FINRA's immediate response to Richard Hoffman's trial in terms of the Roza case, which is quite interesting. I'm also going to be looking at some action that the SEC took, which I think is the first of a kind or extremely rare against naked short selling. So there is a precedent of them taking action, and I'm also going to be sharing with you a new potential squeeze stock that was shared in our Discord. So stay tuned for that. Before we get started, a quick headline in terms of the market from Yahoo Finance: debt ceiling, two key issues in focus as McCarthy says the sides are far apart. So let's have a look at these two key issues. So there are glimmers of possible compromise in the weeks ahead in terms of whether the government should require more work from low-income Americans who benefit from social programs and whether to eliminate the red tape required to start new energy development. So hopefully positive news there, and good news hopefully for the market. I'm now going to share with you the only known case of the SEC taking action against a broker-dealer with regard to naked short selling, and also possibly the only the third case since 2014 against short selling. So there is this does create a precedent of the SEC taking action. So in other words, because they've taken action in the past, they can take action again. So let's have a look at this news from the National Law Review, and we can see here headline from May the 27th 2021: the SEC brings naked short selling case. So it can be done, and this is something that happened. And in terms of the article here, naked short selling is often claimed by struggling public companies to be the source of their woes. We know that certainly, but let's now have a look at what the key concerns were with regard to the SEC. And we can see here in the article, it says here, what did the broker-dealer allegedly do wrong? So according to the complaint, the broker-dealer mismarked 96% of a certain hedge fund short sale orders on two separate issuers stock totaling more than $250 million as long or short exempt. This mismarking allegedly generated $1.6 million in broker fees to the broker-dealer. The effect of the mismarking was that the hedge fund was able to sell the securities short even though it had already had a short position in the securities and did not borrow or locate additional shares to sell the short. So that obviously sounds shocking, but I think that is also an example of something that I think is rampant in the market right now. So it looks like the SEC were obviously maybe have got out of the bed on the wrong side on that particular occasion and did actually realize that this is wrong, and if they did that then, maybe they need to do that again. But the SEC here in this case alleged that the broker-dealer ignored multiple red flags. So first of all, these multiple red flags were the broker-dealer was aware of prior compliance concerns regarding the hedge fund's net short positions in the securities it was willing to sell. It was selling in its broker account statements by the hedge fund employees. They did not expect to deliver the securities by the settlement date, so they knew they were not going to deliver, and they were fairly sure about that. The hedge fund's failure to provide documentation showed that it owned the securities on the trade date, and also the hedge fund's repeatedly failure to deliver the securities by the settlement date. So this apparently the SEC realized there was a problem at that time, so it should also realize that this is a problem right now. Let's have a look at the developments with regard to Richard Hoffman's case against Fidelity and also FINRA, and how this has had an impact directly on the Roza case against FINRA as well. So this is the judgment that we saw. So we can see here in the case, Richard Hoffman versus Fidelity Brokers Services LLC. There are a few motions, but the one that we're interested in here on the page below, if we look at section 72, what the partial judgment from the judge, Mr. Mark C. Scarsi, has stated: it is ordered, adjudged and decreed the plaintiff Richard Hoffman's claims against the defendant FINRA Trust and also DTCC are dismissed with prejudice and without leave to amend. So obviously the judges, looks like the judge is certainly saying that one of the reasons for this is because FINRA allegedly has some immunity. We do dispute that, and I think the judge is obviously not understanding that yet. So what has happened immediately, if we look at this case here of Roza versus FINRA, that is ongoing, obviously, and the judge here, Robert L. Hinkle, again, in this particular case, we can see here, Wednesday, May the 10th, they've wasted no time, FINRA, section 28, they have immediately added a notice. So this notice is a notice of supplementary authority by FINRA, motion to dismiss for lack of jurisdiction and failure to state a claim. 27, response in opposition to motion, but what the exhibit they have added on is the exhibit of the judge's opinion in the Hoffman case. So this looks like FINRA are certainly aware of all the legal actions going on, how they are all potentially linked, and they are obviously certainly moving as quick as they can to deal with all these cases, because once one of these cases breaks, they are in big trouble. So so far it looks like they are holding the fort, but the battle and the arguments and the cases are building. So let's see how much more they can keep away. What I'd now like to share with you is a new stock to the channel, ticker symbol PXMD. This has also been shared exclusively in the Discord prior to the video, and this was also a stock that we added to our weekly watch list with regard to the phase 3 trial results that are expected in the second half of 2023 for HAT 301. So let's have a look at this company. We did also call out a couple of others, GSIT, FFIE, and we also called out GETR, which I think is doing exceptionally well. So if you would like to get advance notice of these calls, you can certainly join us. Details are in the description below. So let's have a look at Paxmedica. So in terms of the profile, this is a clinical stage biopharmaceutical company focused on developing innovative treatments for unmet needs in neurodevelopment disorders. So obviously it's a biopharmaceutical stock, so it does come with the general risk that all bio stocks have. So in terms of the stock news, it's currently working on treatment for autism. It's also working on an African sleeping sickness with HAT. So bear that in mind. That's something that we're going to come back to shortly. The next major research related catalyst, PAX 101 phase 2b results. PAX 101's IND PAX 101, and it's in a phase 2b trial for ASD. We also have a phase 3 trial in the pipeline as well, which we're going to look at. In terms of the forecast, it could experience a run due to its phase 3 HAT trial and PAX 101, which is what I'm focusing on now. Given that the information and strength of its support, is safe to assume that the stock has devoted following. It has a strong following. So the stock is trading near its trend line support right now. Short interest, we're looking at 32%, and possibly a short squeeze, but again, it's no guarantee in any short squeeze call, as we know. So let's have a look at the biopharmaceutical website exclusive PXMD catalyst. We can see first of all HAT 301. Well, that's the interesting one. It's currently at stage 3, so we can look at the catalyst date according to the biopharmaceutical website, second half of 2023. Phase 3 initiated, noted November the 8th, 2022, and trial results are expected in the second half of 2023. So there's no specific date, but we are close to the end of the second half of 2023. So we are watching this carefully. But in terms of the other pipelines from the website, we can see here there's also a PAX 102 catalyst date to be filled in 2023. PAX 101 is ongoing, and PAX 101 Suramin to phase 2b is also currently ongoing. In terms of the key one that we're interested in, PAX 101 for HAT, this is an advanced program in the pursuit of early stage East African HAT, and it's been in continuous use as the standard of care for the treatment of the early stage of the East African sleeping sickness for more than 100 years. So we are expecting hopefully news from the company in that. So ticker symbol PXMD, and finally details of joining are in the description below. Thank you very much for watching. Please stay tuned.